Imagine you are standing in a busy marketplace and the prices of items keep changing every minute. You see an item that you think is underpriced and you decide to buy it. Then minutes later, the prices go up and you quickly sell it for a profit. This is the essence of intraday trading in stock market. But instead of buying and selling physical goods, you are trading in stocks and everything happens within the same day. So what exactly is intraday trading? Let's break it down. Intraday trading, as the name suggests, is the act of buying and selling stocks within the same trading day. You enter and exit your trades on a same day, hoping to profit from small price movements. Sounds simple, right? Well, it's a bit more than that, but let's explore it further. 1. The basics of intraday trading. Now you might be wondering, how does intraday trading work? Let's use a simple example. Imagine you are following a stock, let's say company XYZ, which is priced at 100%. When the market opens, you notice that the stock tends to rise by 1 rupee or 2 rupees throughout the day based on various factors like market news or earning reports. In intraday trading, you could buy shares of XYZ at 100 in the morning and then sell them later when the price rises to 102, even though you are only making a small profits. If you are repeating this process multiple times throughout the day, making multiple small profits that add up. This strategy works best for those who can monitor the market throughout the day, looking for opportunities in real time. 2. Tools and strategies used in intraday trading. To succeed in intraday trading, you need more than just a basic understanding of stock prices. You will need some essential tools and strategies. Think of it as being a chef. You need the right ingredients and cooking methods to prepare a delicious dish. First, let's talk about technical analysis. Intraday traders often use charts and indicators like moving averages or relative strength index to predict price movements. These tools help traders spot trends and identify the right time to buy or sell. Let's consider an example. If XYZ stock has been hovering between 100 to 105 all morning and suddenly it breaks through 105, many traders might take that as a signal to buy, anticipating the price will go high. But it's not just about charts. Risk management is also crucial. You can set a stop loss orders, which automatically sell your shares if price drops too much. For example, if you buy XYZ at 100 rupees, you might set a stop loss at 98 rupees, limiting your potential loss to 2 rupees per share. 4. The risks of intraday trading. Intraday trading might sound easy, but like any investment, it comes with risks. Remember, the stock market can be unpredictable and prices can be swing in any direction. This means you could face significant losses if you are not careful. Let's go back to our XYZ stock example. Suppose you buy shares at 100 rupees, but instead of rising, the stock starts dropping. By lunchtime, the stock is down to 95 rupees. If you don't have a stop loss or if you hold on to the stock hoping for a bounce, you could end up losing more money. Another risk is over trading. Sometimes the excitement of making quick profits can lead traders to take unnecessary risks. If you trade too often or with too much money, it could result in quick losses that are hard to recover from. Is intraday trading right for you? So now you might be asking yourself, is intraday trading right for me? Well, like anything, it depends on your goals, risk tolerance, and availability of time. If you are enjoy fast-paced decisions, keeps an eye on market news and can handle the ups and downs of the market, intraday trading could be for you. But it requires practice, patience, and a well thought out strategy. Let's say you have a job with a 9 to 5 schedule and limited time to monitor the market. Intraday trading might not be the best option, but if you can dedicate time to studying charts, understanding market signals, and managing risk, it could become a profitable venture. Remember, there is no one size fits all answer. Some traders are successful at intraday trading, while others prefer long term investments. The key is understanding your own style and finding a strategy that fits your needs. Intraday trading can be exciting and potentially profitable, but it's important to approach it with caution. Start small, educate yourself, and practice before jumping in with large amounts of capital. The stock market is like an ocean, sometimes calm, sometimes rough, but with the right tools and mindset, you can navigate it successfully. Thanks for watching. If you found this video helpful, make sure to hit that like button and subscribe for more content. And feel free to share your thoughts or questions about intraday trading in the comments below. Happy trading!